Hey guys, happy Fed Day. Wanted to get a quick video out to you just to kind of give you an idea of what we saw occur today and its impact and what to expect going forward. And so just to bring you up to speed and make sure you know we got you covered. And of course, we're here if you need anything. So the Fed cut the Fed fund rate by 0.5% today. Now, this is the first time they've cut that rate in about 4 years. So it's a pretty significant move. However, we kind of knew it was coming because Powell said back in August that they were going to make a change of policy, which meant a cut was coming at this meeting. And that's part of the reason why today is kind of an anticlimactic day. So we saw the Fed cut, and for many people, when you hear, hey, the Fed just cut rates 0.5%, the immediate thought is, well, mortgage rates dropped 0.5%, but that's not the case. Mortgage rates are not connected to the Fed fund rate. The Fed fund rate is connected to the prime rate, which is connected to things like your home equity lines of credit, your credit cards, maybe your car notes, things along that line. And so if you do have a home equity line of credit, or if you're pursuing a home equity line of credit sometime soon, you should see the terms on those improving directly to this cut. But for mortgage-backed securities and for mortgage rates in general, well, actually today we didn't see any improvement at all. Today we ended up slightly worse than we were yesterday, and that's primarily because this move has been telegraphed. Now, we didn't know it was going to be 0.5%, but we've known that there was going to be a cut coming at this meeting. The 0.5% really became more of an expectation, I would say, in the last week, and really going back about a week now. And I was also a little bit surprised that we didn't see more positive movement from the 0.5%, but we got what we got. And so from here on out, it's going to be a matter of what's the rest of the data showing, and that's going to determine how mortgage rates move forward. So all that being said, what now? What next? Well, if you're looking at refinancing, which I've talked to a ton of clients here recently about refinancing, it's going to make sense for some, but not all. And so that's just something we need to evaluate. We need to get our eyes on the current balance and rate and mortgage information and just take a look at it to see whether or not doing so now makes sense. I think for many, it's going to be a matter of continuing to monitor things and waiting, but there are some opportunities right now as well. Now, if you're buying a house, well, in that case, I think urgency is maybe a little higher than it would have been otherwise, because now that the news is saying, hey, they've cut the rate 0.5%, your average layperson is going to hear that and they're going to think, well, rates just dropped 0.5%. Maybe I'll go look for a house now. Maybe I'll go check out what's out there. And so there could be a little bit of a bump in the activity, which means that if you've had your eyes on a house or been thinking about it, there may be some competition coming your way. And as rates continue to get better in general, I think that's more of what we may see from a competition standpoint. And so we're here to help out, answer any questions, make sure you've got what you need and we've got you covered. So if there is anything, go ahead and give us a call, text, or email, reach out to us, let us know. Otherwise, we'll keep you posted as more things develop here. Hope this helps. We'll talk soon.